Buy low, sell high strategy explained. The buy low, sell high strategy is a fundamental principle in investing and trading. It involves purchasing assets when their prices are low and selling them when prices increase, thereby making a profit from market fluctuations. What does buy low, sell high mean? This strategy refers to buying assets at a lower price point when they are undervalued or out of favor and selling them at a higher price when their value appreciates. Why use the buy low, sell high strategy? The primary goal is to maximize profits by capitalizing on market inefficiencies, price corrections, or temporary declines in asset value. How to identify buy low opportunities. Look for assets that are undervalued due to temporary setbacks, market corrections, or negative sentiment. Indicators like low price-to-earnings ratios, oversold technical conditions, or economic cycles can signal buy opportunities. Recognizing sell-high moments. Assets that have experienced rapid price increases, are overbought, or have reached peak valuations present sell-high opportunities. Technical indicators, market euphoria, and unsustainable growth often signal the right time to sell. Risks of the buy low, sell high approach. Timing the market is challenging. An asset purchased at a perceived low might continue to decline, and an asset sold at a high might continue to rise. Emotional decision-making and market volatility add to the risk. Key strategies for success. Conduct thorough research, use technical and fundamental analysis, and maintain discipline. Setting price targets, stop-loss orders, and avoiding herd mentality can enhance success. Examples in different markets. In stocks, buying during a market correction and selling during a bull run is common. In real estate, purchasing undervalued properties and selling when demand surges follows this principle. Cryptocurrencies also exhibit volatile cycles ideal for this strategy. Long-term versus short-term approaches. Long-term investors buy low during market downturns and hold until values rise significantly. Short-term traders exploit daily or weekly price fluctuations for quick gains. Tools to help implement the strategy. Use financial tools like price charts, moving averages, relative strength index RSI, and valuation metrics to identify buy and sell points accurately. The buy low, sell high strategy is timeless and effective, but it requires patience, market knowledge, and risk management. When executed correctly, it offers substantial returns, making it a cornerstone of successful investing and trading.